weekend all. Ira Epstein of Linn & Associates with your weekend edition of this metal update. And this is for Friday, the 5th of April, 2019. And the markets, as you can see, are all closed behind me already. It's an interesting week. Gold didn't do an awful lot, as you'll see. The market finishing off today, at least, $1.30 higher, and silver pretty much unchanged. Copper still sinking back off disappointment that the Chinese trade deal's just not getting done earlier. Now, remember on the weekly edition, we'll start off with one monthly chart, and then everything's going to be weekly because we're looking for the bigger picture. And then on Monday through Thursday, what I do is daily charts. I start off with a weekly chart and then go to the dailies there for you. Let's get to where I want to be right here. If we take a look on the monthly chart, I think you'd agree. Gold has been going sideways for a very long period of time, back actually to 2016. So this is exciting in the sense that, is the market building a base to move higher from, or is this a top that it's going to drop away from? The black bands that you're seeing right here are called Bollinger Bands. And on a chart, their goal is to keep the market trading within them 95% of the time. Eventually, a market breaks away from that, and they move either up or down rather sharply. But that's not been the case. You've been caught in a sideways action for a long time. When we take a look at a weekly area chart of closes, the reason I do this is to take out the noise of what the highs and lows of the week were. I'm just interested in the settlement. And since we've gone to 1329.20, this market has backed off to this red 18-week moving average of closes. In my charting course, I teach that the 18-day or the 18-week average, depending on the chart you're obviously on, is often one of these longer-term averages where markets, if they're falling, they like to go to it and check it out. If they've been rallying, sometimes you'll do that and check it out. When a market is staying under it, the market is said to be bearish. When the market is staying over it, it's said to be bullish. This was the corrective wave that we're in. When I put on that same information with a bar chart, you see the difference? Here's the simplicity, and this is where it gets a bit more difficult. When looking at this chart, you can see the market made its peak, and now from there, it's been gradually working its way lower. The first thing I notice is that the market has a pattern of lower highs, and it's had lower lows. Now, this past low of 1280.80 was taken out this week. This low of 1279.50 took that out. So we got the definitive pattern of lower highs, lower lows. The question is now, where's support in the market? So I go back and I look to see where the 18-week, that's the difference. This is the 18-week, the other was the 18-month. 18-week moving average of closes is. This was the, let me come back here so I don't confuse you. That's the 18-day, and this was the monthly chart. Do you see what I'm getting at? So that's the 18-month moving average of closes, the 18-week moving average on a close-only chart, and this is a chart showing the bars, but it's on a weekly chart again. And the market found its first level of support last week at that 18-week average, and this week it tried to probe lower, wasn't successful to get to the 100-week average, which is 1275.50. When I put on the Bollinger Bands, like you saw me do on the other chart, this gives you an idea of where the resistance is. Notice the look, how different this chart is than that monthly that was just going sideways. So this is more of a trading affair market, and the question is, what could happen to turn the market up, or what could happen to keep the market going bearish? The fact that the market finished at 1290.40 means it closed underneath the 18-week average. I define bias as to where price closes relative to the 18-week average. Therefore, the bias is down, the trend is down. The first support level is 1275.50. Even if the market rallied dramatically through 1324.50, the fact that the market has a lower low in place this week could only mean that you'd have a lower low and a higher high. So that's the first level of importance. I next want to see what momentum is doing. And I use a slow stochastic indicator. It's no different than MACD, moving average convergence, divergence. I have no idea what these things mean. My friend George Lane named it. I have no idea what a stochastic is. What I do understand is the formula. And the formula, when it's looking at it, the difference in the formula of these two lines is simply that one is using 3 weeks of moving averages and the other 5. And the purpose is the two lines will crisscross, either go sideways or crisscross down. Go to the upside, sideways, or down. They don't have to go on the top here. They could just bounce around too. You can go like that all the way to the top and back down. You learn to start mastering the formations of those, because the theory is that price is a follower of momentum. Momentum leads price, and the momentum of this market is still down. The gold-silver ratio is what a lot of traders used to look at to see, gee, is silver getting underpriced or overpriced relative to gold? Now, I've heard people say that it has no relevance anymore. Okay, that's their opinion. Other people say, no, it has relevance. It's just gone to a high level. It's no longer in the old 16 or 32 to 1. We also had a gold standard at one time relative to silver. So you got to take it all into account over time. But the importance for me, at least, and I do this as much for you as I do for me, is that at this point, because the price, the higher it goes, the more ounces of silver you need, gold has been relatively stronger than silver, and you see that coming up here. On the GLD ETF, you have a pattern of lower highs, certainly lower lows. Unlike the futures, this did a much better job of making a challenge of that 100-week moving average, and it did find its support in between those two numbers. The market finished out at 121.98, which is just under the 18-week average, so the trend is down, the bias is down, and momentum is down. So we have a market in a bear trend still here. GDX is different. This market, the first thing is, it did not settle under the 18-week average. The second thing, if you look at where the low is, you've got a lower low and a higher high. Not the same as the other markets were trending. And what it's using as its support isn't the 18-week average, it's using the 100. Is it trending? No. So we have in gold markets that have more downside momentum than they've had upside. In the silver market, you've got lower highs, lower lows. The trend is down. Resistance back up at 1535, let's say. Momentum still pointing lower. Let's assume the market had a big rally and it gets through 1552. Unfortunately, this week's low at 1486 was lower than 1492. So no matter what it does, I'd have a very difficult time as a traditional chart of saying you'd be in an uptrend. An uptrend should be defined as higher highs, higher lows. Downtrend, lower highs, lower lows. No trend has in some manner a higher high and a lower low. Got it? So the market probably will find resistance in the 1535 level should it rally there. If it breaks further, maybe it goes to the lower Bollinger Band, and that number's been climbing each week about 20 cents. So if it stays like it's been doing, I'm going to guess that number's going to be somewhere when we reopen Sunday night around the 1460 level. In the copper market, as I said, some disappointment. The market's had an upside bias as the trade talks between the U.S. and China have gotten better and better. However, when the president said this week that we're 4 to 6 weeks away from a deal, that sort of took the air out of the market. And as you can see, we were down pretty good at this point in time, down about 400 points on the week. So that's 4 cents. The range of the week was rather big too. But the market's trying to hold together at the 100-week average, and it has resistance at the upper Bollinger Band. I teach that the Bollinger Band, if you think of you played pinball, I'm hoping, and if you have, it has a flipper. So when the market gets up to the upper Bollinger Band, it's like a flipper hitting it that way. When it gets down to it, it flips it the other way. It's called support and resistance, but it's a good way to think about it. And I see a market here that is void of a trend. Yes, the bias is up because it's over the 18-week average, and momentum hasn't turned down. It was a disappointment for the chart. The platinum market came alive a couple of weeks ago, and its first challenges of the upper Bollinger Band, that flipper hit it, it dropped it back to the 18-day average, tried again, got thrown back, and now the market's broken through. So you have a market with higher highs, higher lows, higher highs. It was in a broad sideways action. It has tried to break out to the upside. It got thrown back today when it hit the 100, as you can see, the 100-week average of closes for a moment, but it managed to close strong at 901 over it. So until the market breaks through this last week's low, way back here in the 833s, some traders are going to say this is a breakout to the upside in this market, while you have a breakout to the downside in the palladium. Now, the palladium had been in the most massive of bull markets in metals in years, and it just kept running and running and running. The trend lasted nearly a year, and prices went from under 800 all the way up and doubled to 1595, and finally a correction in that is underway, and the market's got to restructure itself. That's the way to look at it. But the spread, platinum palladium, which was popular the other way, you're getting all that unwinding, I think. In the dollar index, your eye should go right to the fact that you're going sideways. You're not breaking out to the upside or the downside, and you haven't for a long time. Certainly, this market began in November, December, peaked out here, had another challenge. Like I said, that flipper knocked it back down, made a challenge of the lower Bollinger Band, got thrown back up, and you're not trending. You have a higher high, lower low, so you're waiting for something to set in there. You know, the way I explain it, I hope, makes things easy to understand. But I had a good hand in helping Futures Magazine put together these guides to technical trading. And unfortunately, they've closed their doors. They may be resurrected one day, but I still have these, and I made them into PDFs, and they're as good as you're going to see. I mean, I really think they're great way to begin understanding price time, Elliott wave, be it the GAN, be it options primers in here, money management, and of course trend lines and everything else we talk about. How you get it's pretty simple. You can either call my staff or you can go to our website. You'll see a carousel of free offers. Click on it and you'll see a bunch of other offers as well there. Take advantage. I'm Ira Epstein. Have a great weekend.